Friday, April 11th. It's been an interesting week. The world is moving. The events overseas, once again, the global economy slowing, have done all sorts of things to the stock market and the interest rates. But tonight I'd rather speak to you about the Fed itself. The Fed is getting an unusual amount of bad press, none of which it deserves. It gets this press mostly for reasons extrinsic but some intrinsic to the Fed. The Fed has a chairman who in the modern era mostly calls the shots, although she must be collegial. There are governors who are appointed by the president and confirmed by Congress. But there are a dozen regional Fed presidents, half of whom should not be allowed outdoors without a keeper. And when they speak, they do things that are, if not unprofessional, at least are un-central banker. And it keeps people confused about who's actually in charge and whose voices are reasonable. But external to the Fed sit financial operators, salesmen, mostly around the stock market, who find it convenient to blame their mistakes on the Fed. And there are two general reasons for blame. One is that the Fed shouldn't meddle with markets. It's the Fed's job. When the world's coming to an end, it's the Fed's job to save us. When the world is having too big a party, it's the Fed's job to stop the party. Now, those who have put trades in place on continuing parties or hoping the world will come to an end are often frequently very annoyed that the Fed has intervened. There's another tribe, of course, that wants nothing to do with government of any kind and thinks nobody should intervene with anything and things should simply be allowed to go. Now, today, these commenters, to be found especially on CNBC, but Bloomberg, Fox, everywhere, are trying to tell the story that quantitative easing was a complete waste of time. No, it was not. QE3 might not have been done and we might have been all right, but QE1 and 2 we needed very badly. They also make the argument that they did nothing but push the stock market into a bubble. We don't know that. We don't have any way to measure that. In the middle of this week, the Fed showed its cards in a way that it has to from time to time and got nothing but criticism. The Fed appeared last month to say that it would begin to raise its overnight cost of money as early as next year, and maybe from 0 clear up to a percentage point, and a year later up to 2. And midweek this week, it realized that it had sent the wrong signal. It corrected itself. The Fed will begin to raise the overnight cost of money next year if the economy follows through in a forecast to acceleration. The data don't support the acceleration. There isn't one. There isn't one now. And it's almost impossible for the Fed to say, given this we'll do that, given this we'll do that. We got the best corrective we could get. The interest rates are on the low of the year. The stock market had a bad week, much more because of overseas slowing than anything the Fed did or did not do. But I recommend to all, when you hear criticism of the Fed, that they don't get it right, they make things work, dismiss it and the speaker out of hand. Trust them. They're the best friends we got. Thank you and good weekend.